Did you see the stock market? Why in the hell is it acting like it's taken a victory lap? Did you look at the 10-year Treasury today? All right, let's talk about something that just happened and why it's such a big deal, especially if you care about interest rates, mortgage pricing, or really just the future of the US economy. So China just dumped nearly 19 billion in US Treasuries. And while that might sound like a nerd finance talk, this is one of those domino effect moments that hits everything from your mortgage rate to our national debt strategy. So we've talked about 10-year Treasury, but this is how it works. China is one of the largest foreign holders of US debt. When they stop buying, or worse, they start selling like they just did, it creates a massive supply and demand imbalance in the Treasury market. So less demand for US debt means the yields go up to attract new buyers. And what's that benchmark? The 10-year Treasury. So when China sells off treasuries like this and the 10-year moves up like it just did even more today, that filters through the entire system. Mortgage rates go up, loans get more expensive, and the Fed starts feeling the pressure. But here's what really matters, because this isn't a one-time thing. The bigger part of this global shift is that countries like China are starting to hedge against US debt. They kind of see the writing on the wall that our debt is exploding, and foreign buyers are asking kind of normal questions here. Why should we keep funding this? And are we worried now the US is going to print more money anyway, which is kind of what recently happened. That's that QM thing. So the US has chose like two options that are really bad. Keep rates high to attract buyers, which kills the economy, or start printing out more money, which devalues the dollar, and then we risk inflation again. So either way, the 10-year becomes the pressure valve for the entire system. Like I've said, if you're watching mortgage rates tick up, this is why. It's not just inflation. It's not just the Fed. It's this whole global chess game around who wants to hold our debt. And right now, some countries are saying we're good. Big move, bigger implications, more to come. But you really have to follow this, because this is where everything's going to stem from. Ignore the market, ignore all the headlines, watching that 10-year, figuring out who's doing what, because I think now Japan becomes our highest. Like China's now not the highest in debt. Now Japan is holding the most of it. I think back to the UK is number 2. So this changes all things, because as we're doing this, we now have tariffs. So they can't buy our debt and also, do the tariff thing. Something's going to start to suffer. So this is what we're seeing now. More to come.